And bring in CNBC contributor Courtney Garcia of Payne Capital Management and Emily Roland of John Hancock Investment Management. It's great to see both of you here. Emily, you first. What do you think about what Mr. Johnston has to say? Are you on the same page in terms of thinking that this rally has a considerable amount of runway to it?
Yeah, I mean, I think certainly there are some oversold conditions out there. There's a lot of cash on the sidelines here that's waiting to get deployed, potentially some short covering. The bar is very, very low right now as far as earnings seasons goes. I keep hearing everybody talk about how earnings have come in better than expected. We now have 10% of companies having reported, and we're at negative 7% year-over-year growth. So I'm not sure quite where that optimism is coming. And then you can see on the days where rates come down, you see this massive backup in bond yields taking a little bit of a breather. That's equities off to the races. So I think, again, if you can see rates come down, I think equity markets catch their breath. I completely agree that inflationary pressures are going to subside, and they're going to do so quickly. But I think what we need to recognize here is that is a short-term problem being solved. And by the time the Fed is done fighting the inflation fight, they're going to have a much bigger problem on their hands in 2023, which is recession.
Court, I mean, it is a little bit early to declare victory. We just started with the banks. And there are some significant reasons in the environment, let's say, that have led to their results being better than feared, I would say. But we're going to get a reality check, aren't we, once tech companies start to report en masse, right? The dollar is going to come home to roost there. We're going to find out about other issues that exist that may not be as rosy as we want to believe at this moment.
Yeah, and we're definitely going to have to see how companies continue to report here. The banks, I think, were really important because they give you a really good bellwether to how the consumer is doing. And I think they did come out as we expected to show that the consumer is still on really good footing, which does keep the economy running here, which is good news. But I do think especially we have the tech companies coming to your point, but I think the bigger one too is going to be all of your consumer facing companies. They're also going to tell of whether moving forward, are people still spending, or is that inflation really starting to tampen down demand to the point that the Fed wants to see in order for them to lower interest rates. So we definitely need to see not just how they're guiding, or not reporting now, but how they're guiding in the future. I think it's those consumer companies which are going to be the most important. We're still a couple weeks away from that.
These mega caps, Eric, are critically important to your thesis, right? They better not lay an egg, or your idea of a significant move lays a bigger one.
Yes, that's fair. So we're going to get, next week, Apple, Amazon, Microsoft. And, currency is definitely going to be a headwind, and you're likely going to see the guides reflect that. I think the market will put very little value on the currency moves and what they're doing to earnings.
Why? Because you think we just already know it, we expect it?
Yes, people are going to look through it. They're going to say, look, that's currency moves. Now, in fairness, the dollar is probably going to be strong for a much longer period of time, but I think the market will dismiss that. As far as the core earnings for these companies, I think it'll come in, I think there'll be a sigh of relief. I think it won't be the beats that we saw, the past year, but I also don't think we're going to see significant misses. And so I do think there will be a sigh of relief from the market because the nervousness around it is high, and the price performance of, a Google and Amazon has been pretty poor. So, the market is certainly, and valuations, you look at a Google is a teens valuation. Meta is a teens type multiple. So if numbers come in, okay, which I think they will, not great, okay, then I think the stocks can rally.
Emily, what's your view on these stocks, right? I mean, we got to get through this week. It's just Monday. And we have a lot of earnings this week, but everybody's already looking ahead to what lies ahead.
Yeah, I think the third quarter is going to be fine. I mean, if you think about how the U.S. economy held up, we did all right really until the very end of the quarter. I think Courtney's point about the forward guidance is absolutely critical here. You've got tons of headwinds right now. The stronger dollar was mentioned, higher input costs, the cost of capital has risen to extensive levels. The pace of the year-over-year change in the U.S. economy right now is absolutely stunning. So you've got to look and find CFOs and CEOs who can navigate this, who can maintain margins, who have a lot of cash on their balance sheets and a limited need to tap the capital markets in order to grow, in order to be more profitable. So looking for those higher quality companies with lots of cash, great return on equity, ability to fight this war on margins that we're about to face and come out of it on the other side, I think makes a lot of sense. Higher quality, more defensive assets are the way to go.
Court, what looks most reasonable to you in the market today?
Yeah, and I still think that you want to look at, to your point, that what you just said, companies with high cash flow, companies that are going to continue to do well, even if we are in a higher rate environment. Even if rates come down, they're probably not going to be at levels they were over the last decade. So things like healthcare, things like energy, that's really where we've been looking. I think you want to continue to look there because keep in mind, nothing fundamentally has changed a week, 2 weeks ago than it did today. We're still in this period where, yes, things are coming up because we have an oversold condition, but the overall macro picture hasn't changed. You want to continue to be in those same areas.